Hello, fellow traders. 'Tis I, the Rumpled One. It's Sunday, September the 8th, the year 2019. Let's talk trading. Weekly open and gap. Okay, it's the second trading week of September. And I know on each and every trade so far this month and for the rest of the month, you will definitely use your money in risk management. You will have your stop loss in place and you will use the correct position size for the risk. Well, we have some gaps that haven't filled. We've got plenty of opportunity here. So, I hope some of the traders out there who have been following my videos will take advantage of these gaps. So for the year, right now, the yen is still down 271 pips. As you can see here, we've crossed above the previous day's midpoint. Notice that the previous day was an inside bar. Let's just go back to the weekly chart here. As you can see here, we had a breakout last week. So maybe we can look maybe to fill this missed pivot right here, this missed weekly pivot. So keep your eye out on 107.46. Let's see, what's this dot say? 107, call it 0.47. So look for price to hit there, possibly this week. Needs to fill that missed weekly pivot. Once again, on the daily, we had an inside bar, almost a doji. Doji sometimes signal reversal. So trading out of the wick zone, it's going to be interesting because if you're trading south out of the upper wick zone, trading short, you're going to wind up right into the lower wick zone. So you know price doesn't like to stay in the wick zone. So look for price to either break out of the previous day's high or the previous day's low, possibly both. Hold on just a second. Okay, I updated my template. As you can see, we are above the first trading day's open for September, but below all the rest. And you can see where they are right here. And on the range, you can see here, we're outside the September range, but we're still below the other ranges. And here's that inside bar right here. You see there's one on the pound, dollar, pound yen, a few other pound pairs, the euro dollar, euro. All of my favorites, right? And on the weekly, you see you have an inside bar here on the New Zealand CAD. There's some other opportunities. And here we've got a few gray. So gray or blue show the opportunities to take those inside bar trades. Have to wait on the computer again. Okay, back to you. We were looking at those inside bars, and I wanted to switch over and take a look here. Once again, we're only a couple of hours into the trading day, so not much of a range. And you can see here, once again, looking at the previous days, open, high, and low, where price is in relation. And let's see, here we have the monthly H1 highest open back here, the D1 daily highest open, weekly H1 highest open, just put in the daily H1 lowest open back here, we're on the H1 bar. And weekly H1 lowest open. Rat zone, you can see pivot point was in between the zones, so no real bias based on the pivot point. It obviously filled into the buy zone, but you can see here we had the gap down, so the trade was to the long side. Now we're just going to see if we can break out to the upside of the previous day. And the rat zone, you can see here the 15, 14 pip range. There's no, you can't trade the rat zone yet. Okay, let me switch over to H4 so we can look at the pivots. There we go. Okay, monthly pivot right here. We took that out already. Where is our weekly pivot point? Okay, we've got the weekly pivot down here, 106.63. But remember, we had a missed pivot up here. Let's just see which way price wants to move. And here's a daily pivot that's missed. Here's a daily pivot that's missed here on the yen. Switch over to the weekly. Okay, there's the current weekly pivot. You see the pivot here. Look to see if price can tag maybe both of those pivots this week. Once again, we've only, so far this year, we only have 3 missed pivots on the weekly. None in 2017, none in 2018. Very good statistical trade. Price action. Once again, with the yen, we don't necessarily look for price action, for price to open inside the lines and then escape. We're trading off of the 2-ball, or we're saying it'll go from one level to the other, but in the case of the yen, it might take a couple of hours rather than 1 hour due to the range of the hourly range of the yen. And you can see the wick zones right here. And simple lines I like to trade. Previous days, open, high, low, ditto for the week, and ditto for the month. Great lines to trade. As far as the tick level, you can see here it's a Sunday here in the US of A. So just meandering through the Australian, New Zealand session. And you can see here, it's really not time to trade Einstein lines either. Okay, I've got this set almost. The Einstein line is set at 2.5 threshold. That's about right for the yen. You can see that's about twice the spread. Now, there's something I want to go over with some traders here, because I guess there's some confusion. We talk about the wick zone and we talk about the rat zone. And some traders are having a hard time. They're getting confused. So let's just do this. And I'm using the HO5 indicator here. So let's just turn this one off. And you can see here, we're looking at the wick zone. So we got the previous day's high right here. Now, rat zone traders know that they're going to reverse off of the current daily high, not the previous daily high, the current daily high. That's one thing people get confused with. Now, the second thing is if price comes up and hits this high, and you're looking at the rat zone, but it's at the previous day's high, what you want to look to see for if it breaks out of that wick zone, because chances are it's going to break. Okay, and if it doesn't break, then you look for the rat zone. But if it breaks, you need to be very careful because price could just run on you, and that's what you want to look out for. So at the line, you don't want to, you would buy at the line. You wouldn't be shorting at the line. So once again, if we put that other, we add the rat zone, back on the overlay. Okay, you can see right here. Here's the green rat right here. Let's turn off and the thing is, you see here, this isn't even a rat zone because, which is kind of funny, but you see here, we only have 15 pip separation, but this line is 20 away. So what I'll do is I'll probably come back to this in my video on Monday and explain it again. But you see here, the point being is that if the red rat zone is up here and it's bumping up against the previous day's high, you don't want to short against it on the breakout. That's how a lot of traders get burned. So the easiest way to do it, just remember, don't do the rat zone if it goes above the previous day's high. Now, the caveat to that is, which is something, let me see if I can find that chart. Oh, maybe it's not, template's not here. Oh, no, here it is. So you got the daily range and the weekly range. If price is reached like at least half the ATR, that's when you can also start looking for reversals then, because price has to range, okay? And you see here the average range over the last 24 days was 82 pips on the daily. So it has to range. So if it's somewhere near 82, say 60, 70, in that area, that's when you can start looking for shorts. You don't want to start looking for shorts if it's only ranged about 20, okay? Especially if it's near the previous day's high. So that's one of the things you really need to understand about those methods. The rat zone is based off of, you know, the high minus the close and the close minus the low. Whereas the wick zone just says price doesn't like staying in the wick of the previous day's candle, simply because, once again, it has to range. And usually the previous day's candle wick size is smaller than the daily range. So that's how these things couple together. That's why I run all those distributions. So I have a pretty good idea when it's okay to trade and when it's not. But remember, we're dealing with uncertainty. So even with all those statistics, I can still lose. And remember, these videos are for educational purposes only. Your results may differ from mine. So keep in mind that Forex trading is any trading, it's risky. You can lose all your money. So if you need professional advice, seek an accredited financial professional rather than it's just some guy off of YouTube, right? So anyway, I will probably talk about this some more during the week because I really want traders to understand this because it's important. And that being said, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks this week.